Well, good afternoon, ladies and gentlemen. My name is Max Clark, and on behalf of our team here at the Fox Alliance, welcome to our Beyond the Noise webinar for the second quarter of 2026. We are glad that you guys have taken the time to join us today. Presenting alongside myself is Josh Renfro. He's our Chief Investment Officer here at our firm, as well as one of the founding partners of the Fox Alliance. And then we also have myself and Laura Cooper, who are also members of the Investment and Finance Committee and partners here at the firm as well. We have a lot to talk about today, primarily in relation to what's happening with the Iran war. But before we jump into that, I wanted to make sure that you guys, if you have questions along the way, please feel free to send those to max@thefoxalliance.com. I'll pop this up on the screen at the end of the conversation as well, so that you guys will have the opportunity to ask questions if you so desire. Now, we do want to spend some time talking about the Iran war. It has certainly been a topic that has been on a lot of people's minds ever since Operation Epic Fury got underway at the end of February. But our focus is not going to be as much on the specifics of the war and what's occurring there. It has more to do with things that are not being covered by the headlines. And there have honestly been some odd things about the way that this war has unfolded and some of the details surrounding it. We'd honestly describe them as a little bit weird or out of the ordinary. And so to kick things off, Josh, I would love for you to begin the conversation by diving into some of those topics that we are witnessing here with the Iran war that are a bit out of the ordinary.
Max, I think if we were to take a time machine and go back roughly 10 years, and you were to tell me today, hey, the United States has invaded Iran, there's some preconceived notions that I would have had at that time about what probably would have occurred. First, I think I would have expected the U.S. to come in with all guns blazing. It's the way that we always do things. So, one. Two, in most conflicts, we typically have allies. They're usually the same kind of people. They're usually Britain, they're Canada, maybe some parts of NATO in the mix in that juncture. I would have probably also expected to see troops on the ground, actual men, women, tanks put into an actual occupation of an
Traditional
area.
invasion. Yeah.
Yeah, traditional invasions. And then the last thing I would have probably expected to see is a pretty stark divide where most of the Middle East, if not all the Middle East, was very much against the action. And then the U.S. had a non-Middle Eastern coalition that was predominantly for. And that's what makes today so weird, is that outside of coming in with all guns blazing, none of those things are true today. As the U.S. has embarked on this and now is in an 80 to 90-day standoff between Iran and the United States, the U.S. does not have its traditional cohort of allies. There are no European allies right now that have come out in, not only have they not actually helped, but they're actually in opposition to the attack with where things are happening today. Second, we have not seen traditional deployment of actual conventional methods on the ground. No men and women, no tanks. This has been a air and sea engagement up to this point, targeting strategic assets, destroying them, and that's it. That's been the predominant goal. And up to this point, at least visibly on the forefront, there has not been a regime change either. That has been part of that mixture. Finally, the other thing that's been really interesting about this whole situation is when we look at this conflict, Iran, just because they've only been able to hit the U.S. directly in so many ways, they've chosen to fire at their neighbors. So we have the United Arab Emirates, we have the Saudis, we have other countries that Iran has shot missiles at. And so now we have other Middle Eastern countries launching their own military actions against Iran in this situation. So if I were to have, been done a Rip Van Winkle and woken up 10 years later, it would have been like, what on earth is going on right now?
Yeah. It'd be looking a lot, it would have looked a lot different in our visions of the future than what we're seeing today. Laura, do you have any thoughts about this as well?
Yeah, I think what's really interesting about this is traditionally when we see these type of geopolitical conflicts arise, especially in the Middle East, it's usually pro-US versus anti-US, or Arab countries versus Israel, or even Sunnis versus Shiites. And the lines here are extremely blurry. As Josh mentioned, one of the countries that Iran has bombed is the United Arab Emirates. And they're targeting their energy infrastructure. And as a result, the UAE has decided to remove themselves from OPEC. And that decreases OPEC's daily production by about 10 to 15%, at the amount of oil that OPEC is able to bring to the market, which is majority made up of Middle Eastern countries. So I think that's really, really interesting. And I think it'll be interesting to see how this continues to make effects in what the Middle East ends up looking like here in the future.
Yeah, I mean, this is really a distinct departure from the norm, particularly with OPEC. I mean, everybody in the OPEC world was very much about protecting kind of the cabal or the group of countries there. And you're starting to see for the first time, at least in the most recent period, a country leaving that group. And so we're seeing a lot of odd things and out of the ordinary factors or situations coming out of the Iran war here. And let's back up a little bit and compare that or contrast that to what the norm has been really over the last 70 or 80 years. We've talked about this a little bit before, but when you think about World War II and the United States coming out of World War II, we were the really only major superpower that wasn't physically destroyed, in the midst of all the bombing and the war, because it really, aside from Pearl Harbor, it really didn't touch the physical land here in the United States. And what that allowed us to do was to emerge as really the main global superpower. And ever since that time, really for the last 70, 80 years, we've effectively policed the entire world. We've functioned as the police force for the globe. And that led to a period of relative global peace and free trade. And that was a relatively peaceful period. But we're starting to see a shift away from that. When we look at what's been going on here in Iran, we would describe this, in our opinion, as a harbinger of something much more significant occurring. What we believe we're witnessing is a seismic shift away from that 80-year norm of the United States being the world's police force. And that seismic shift is now taking us to where the United States is going to be focusing on our own hemisphere, the Western Hemisphere. And it appears as though the approach that we're going to be taking is that as long as other superpowers, say Russia, China, and others, whoever they end up becoming, as we step away from that role as the global police force, if other superpowers don't interfere in our part of the globe, we're not going to interfere in theirs. And as I mentioned, this is a distinct and seismic departure away from the geopolitical stance of the U.S. Ever since World War II. And what we're seeing in Iran is a demonstration of this really playing out, in our opinion. And so, with that as the understanding and kind of the punchline of our conversation today, I want us to jump into asking, why are we seeing this shift occur now? What has led to this seismic shift of the United States moving away from the world's police force to now emphasizing the Western Hemisphere? Laura, why don't you kick off that conversation and the rest of us will jump in as we have other things to add.
Sure, yeah. So, I mean, first things first, it's obviously extremely expensive to maintain a global presence from a military perspective. I mean, our defense budget is already well over $1 trillion. We've spent millions or a lot of, billions of dollars in this war already. And it's just cheaper to maintain a unipolar or a multipolar world than to focus on the Western Hemisphere than to be the global police force. You top that off with our mounting national debt problem. We really can't afford to continue to be the global police force. On top of that, we're already spending over $1 trillion on that debt, servicing that debt. So this has become a massive monetary problem for the United States. We also have a middle class that really on both sides of the political spectrum have really said, no new wars. And we look back at the cost of human life lost in the Iraq and Afghan wars, the cost of the wars themselves, over $8 trillion spent over that multi-year period. And the middle class has really had enough with the US kind of posturing themselves as the global police force and really want to spend that money here at home. On top of that, we could afford to maintain that presence globally because our economy was growing pretty significantly, especially uh, if we look 20 years back, the previous 20 years, the economy grew significantly fast. But what we've seen is that we've had a shift in population metrics. And our population is not growing as much as it has been in the past. And that has a huge effect on potential future economic growth. So I think with all of that, um, the money alone, we're starting to see that we can't really afford to maintain that posture anymore.
Also, Laura, just to add to that a little bit, I think that you've really seen the visceral reaction from the American population. And I know there's differing opinions on the war in Iran, but I would say, broadly speaking, if you look at many of the surveys and just kind of the visceral reaction that we saw from citizens of the United States as they heard about Operation Epic Fury and, hey, we're getting involved in another war in the Middle East, I think you could just kind of sense this like impending feeling of, oh my goodness, are we getting
Are
into
we
this
doing this again?
again? Because I mean, when you
Yeah, we
think,
just got out of the last one.
yeah, I mean, you think
Yeah.
about the $8 trillion and all the lives that were lost. Um, and when you ultimately come down to it, the question I think a lot of people ask is for what purpose? I mean, what did we ultimately get out of it? Right? And I think a lot of people are answering that question with, well, not much at all. We ended up with a big debt and found ourselves in a position where it didn't seem like much had changed in the Middle East. And so we'll find ourselves in a position here where I think we're seeing more and more people feel that, which is one of the driving factors for sure behind this seismic shift that we're seeing. Josh, I'd love to have you jump into the conversation here as well. What other drivers do you see for this shift occurring now?
If we look back at history with the major superpowers of the past, because the US took the stage from somebody. Who was it? It was Britain.
Yeah.
Britain was the dominant superpower in the age of imperialism. And you go back further to other empires that had substantial rule back to the Roman Empire. You see this common arc with major empires that have achieved more global standing, which is you have the rise of ascendancy, you have the stabilization, and you have the decline in decadence. And with that period of time, you eventually see societies stretch themselves too thin for varying reasons. But the universal thing that happens is it starts to get too expensive to exert the power. And so they began to withdraw. And so you saw this with Rome. At the height of their power, they'd extended as far west as England and had a huge wall that they built there, all the way to the Middle East and south into Africa. And so at the height of their power, what started to happen? Things got too expensive. They withdrew from England. They withdrew from parts of the Middle East. They withdrew from parts of Africa, and they began to entrench. And I think, honestly, what we're seeing right now is that general trajectory. If you look historically at periods of time in the past, like as an example, the 7 Years' War, this war and many others ended for the same reason that they almost all do, which is we're running out of gold to pay the troops. And today, in the modern economy where we're in now, gold is not ultimately what backs our currency. People can print money. So what is the limiting factor? It's debt. So back to Laura's point, the United States has gotten to a point where our debt burden has gotten so large that we have to really think twice before we engage in a conflict. Even the Iran war at this point has already cost us hundreds of billions of dollars, which will get added to the national debt. And so we really have to ask ourselves every time this occurs, is it worth it? Does this really push the national interest forward in a substantial way? And if we take that mindset and we draw back out to those, okay, what are the things that are different this time? Look at the fact that we don't have any of our normal allies in this fight. Why has that been the case? Because we've already seen friction take place. We've not been as engaged in the war with Russia and Ukraine and helping to protect NATO at this point. And so they've not been as willing to join in and side with us in a conflict they don't feel confident in with where things are at today. The Middle Eastern countries, the fact that we've seen the United Arab Emirates leave OPEC may be looked back upon as one of the most seismic beginnings of shifts in the kind of the political alliance spectrum. OPEC for decades has increased its power by adding additional members, which results in them having more oil production, which results in them having more leverage. We just seen 12 to 15% of the oil production leave at this point. These are major shifts that were taking place. If we back out even further, though, there's probably three other big reasons that I think really contribute to where things are at today. The first of which is, for the longest time, the United States had a very substantial dependency for natural resources from other countries. Energy independence being the most notable. 20, 25 years ago, that was a big problem. In fact, if we think back to the inflation of the 70s and 80s, the oil embargoes, it wasn't just the fact that oil prices were high. It was the fact that there were legitimate shortages where people could not actually, oil gas was rationed.
Yeah.
You couldn't actually, there was not a free supply where, if you're willing to pay, you could get it. There was legitimate shortage issues. Fast forward to today, and that has influenced foreign policy. The war in Iraq, the war in Afghanistan, our involvement in the Middle East. I would argue a large portion of that has been based on the fact that we needed to make sure there was a good free flow of oil coming out of that region of the world. Today, we do not have that same need. The US is now the largest energy producer in the world between oil and now the largest exporter of natural gas in the world. And so, because of that, we do not have the same energy dependence that we once had. And so, our need to project global power, that's one reason why it is reduced. Another piece has been the dynamic with one of the two major other superpowers, China, over the past 30 or 40 years. So for the longest time, China couldn't be a threat. They were a relatively small country. They were made up of largely lower income individuals. They didn't have the strength necessary. But with free trade and a lot of the ultimately manufacturing moving over there, we, over the past 40 years, helped them to create a incredible manufacturing class, not just in cheap goods, but also very highly technical and complicated goods. And they were able to lift 400 million people out of poverty into the middle class. Today, China has the largest middle class of any country in the world. They have their own economic engine, and they have used that economic engine for the last 10 to 20 years to build their own strength. And so they do not have the same need that they had for us once. Today, 12% of their GDP is exports to the US. That's it. They have diversified their economy away from being largely dependent on the US to being, while still a substantial trade partner, nothing like what it was 20 or 30 years ago. And on the flip side of that, the United States has also recognized that there is a cost to being dependent on China. So you think about the COVID crackdown. We saw the Chinese Communist Party ultimately implement some of the most draconian shutdowns and lockdowns in any part of the world, and it resulted in supply chains either coming to a complete halt or at the very minimum a much slower version of what it was before, where the US and other portions of the world couldn't get vital things that they needed for medicines, technology, rare earth minerals, manufacturing. Those things were substantially interrupted, and it was a key contributor to the inflation write-up that we ultimately saw coming out in 2021. And so not only the US, but other portions of the world recognized, hey, there is a challenge when we rely so heavily on a country that has the ability to shut things down completely at the governmental level. It's not a company by company decision. It's not a region by region decision. It's literally one man or a group of people can ultimately choose to do that. And so I think we're going to start to see a large chunk of the world, move away from that. And the US is wanting to do that with where things are at. The last and final trend is this idea of a demographic winter. We're in the midst of a global decline, stagnation in some places and decline in other places in population. So in 1970, there were 3.7 children per woman. And today that number has declined to 2.2. You have parts of the world like Europe and Japan and Southeast Asia where the birth rates are close to 1. China is expected to lose hundreds of millions of people over the next 40 to 50 years, seeing their populations decline by 40%. Even the US now has a fertility rate of 1.6 children per woman. And so we are seeing a stagnation of population as well. Why is that significant? It's significant because if you look at least at the US, historically, 50% of our economic growth has come from population growth. And with immigration, barring immigration becoming a much bigger thing than it is today, we're taking half of that piece of the equation out of the picture and we're relying entirely on productivity. You look at a country like China, where they're actually seeing population shrinkage. Not only will that not contribute to economic growth, but it will be a drag on economic growth. And back to Laura's point, when you aren't growing your economy and therefore growing the size of your tax base and your tax revenue, your ability to fund wars is much more significantly hampered.
Yeah, I think that's a massive point that I don't know, just when you generally think about wars occurring, I don't know that a lot of us think about the actual economic cost of that and the constraint that it puts on countries' ability to actually do that. And I think a key point that both you and Laura made, Josh, is that it's not gold anymore that restricts us, it's debt. And I think the most important thing to understand about the debt is that interest rates really influence that. And
Mhm.
so as you watch interest rates, I think it's even been interesting to see how things have played out already in the Iran war and with tariff policy over the last couple of years, is as interest rates got high, and they got higher because of some policy decisions that were made, you saw leadership say, you know what, maybe we should make some changes here
Yeah.
because we're not able to continue to uh, really weather the increase in interest that that's going to incur on us. I was looking at some statistics before our conversation today, and for every 0.5% increase in the interest rate, assuming it's held for 10 years, it costs us an extra 1.8 to $2 trillion over that
Pocket
10
change.
period.
Pocket
Pocket
change,
change,
Max.
no problem. No problem. But I mean that's what we're talking about here. And that's the real restricting factor. Um, and what's the one thing that you can certainly live without is war. That's the thing that, hey, if we're going to get rid of something, that's probably going to be the first thing that goes, and we're going to, like you were kind of talking about earlier, Josh, retrench ourselves and focus more on areas that are closer to home. And I
Yeah.
think that is a huge driver for why we're seeing what we're seeing today, um, along with all of the other topics that we were just describing. So let's take that backdrop of the motivation for what's occurring here, and I think it helps us inform some of the policy decisions or foreign policy decisions that we've seen made here in the United States. I think a lot of people have looked at some of the decisions and some of the actions that have been taken over the last couple of years and asked ourselves, these seem like they're totally random. How do they connect at all? I mean, you think about uh, us kicking China out of its control of the Panama Canal. You think about us kind of circling and potentially going to be taking some action in Cuba. You think about Nicolas Maduro being captured in Venezuela and us exerting control there. Obviously, you've got Iran. I think one of the biggest ones out of left field was the overtures that we made and sometime very flamboyantly made towards Greenland, right? All of this appeared to be extremely random. And we're not necessarily saying that we agree or disagree with the decisions that were made here, but I think it helps us understand or at least put some of the pieces together if you view those policy decisions in the context of this seismic shift that we're seeing. And if you think about what's occurred with getting China out of the Panama Canal, taking over or eliminating some of the threats there in Venezuela, Iran, Cuba. China has had extensive influence there in those countries. And where are those predominantly located? Here in the Western Hemisphere. And as the United States continues its shift towards focusing on the Western Hemisphere, it's what's been described today as the Monroe Doctrine 2.0. James Monroe, back in the late 1700s, early 1800s, kind of invented and promoted this philosophy of the Monroe Doctrine, which was we're going to exert our geopolitical influence and control over the Western Hemisphere. We're not going to look towards the broader globe. And we're starting to see that shift back. So in this Monroe Doctrine 2.0 environment, some of these things are making a little bit more sense. Even think about Greenland. If you think about Greenland and our emphasis on securing and exerting our influence here in the Western Hemisphere, Greenland is a key area that is important from a national security standpoint. If you think about some of our biggest enemies or potential rivals, so to speak, in the world, Russia, China, they potentially have direct access for a nuclear submarine or a fleet of nuclear submarines to make their way toward our, the core of our country. And having an outpost there in Greenland to protect against something like that can make sense if your emphasis is more on that um, kind of Monroe Doctrine 2.0 emphasis on the Western Hemisphere. Again, we're not necessarily saying we agree or disagree with these policy decisions, but it helps us put some context or maybe helps us understand some of the decisions that are being made and maybe the mindset that is behind the leadership as they make these decisions from a foreign policy standpoint.
Greenland's the Hawaii of the Atlantic.
Yeah, no, that's a great description. Yeah, exactly. And obviously in World War II, what was the first place that got attacked from the United States? And thankfully, the last place that got attacked from a World War II standpoint, it was Hawaii. So obviously, as we see this seismic shift occur, we are entering a new era. We've kind of described it as the New World Order. In our opinion, that's what we're likely to see going forward. And so I think it'd be helpful for us to, as we bring things to a close here, to talk about what the potential impacts of this are going to be. I mean, obviously, if we're changing the way that the world order has functioned for the last 70 to 80 years, there's going to be some pretty meaningful impacts. I was thinking about this before we got on the call today, but that is the fact that everybody on the call today has experienced the norm of the last 70 to 80 years. We've not known anything different. And we're entering a period that is going to be a significant departure from the way things have been done in the past. And so, Josh, I'd love for you to kick this off for us, and we'll all go around and provide our input as well. But talk about some of the impacts that we expect to see from this seismic shift that we're witnessing.
So I think there's a couple things. And once again, things can change, but at this point, with the mindset of this going from a unipolar world where the US was the major power to a multipolar world where there are multiple powers in different regions,
Yeah.
having their dominance in different areas, there's, I think, a couple of major implications that need to be aware of. First off, we believe that we will see a rise in smaller disputes and regional disputes. So when you are in a world where the US, through their Navy and Air Force, are largely the global police, guess what? It means it takes away the ability for a lot of smaller powers to get into smaller squabbles with their neighbors. And so a lot of those people take the weapons, they put them in the cabinet, and they don't open it up for a period of time. At the point that the police is gone, you can start to have a lot of these smaller disputes that were shelved for a long period of time ultimately come out. And I would argue that we're already starting to see that. I mean, think about Russia and Ukraine. At the end of the day, do we really believe Russia would have actually invaded Ukraine if they really felt that it would draw the US into a war with them? The answer is no. Russia does not want another world war. They wanted to have territorial gain without having to fight a large major superpower. Same thing with the Houthis. Same thing with the original Israel Arab conflict. And then, of course, we've seen other small scuffles ultimately take place as well. We believe that this will continue to escalate. Alongside that, we will see the kind of carve-outs that will take place between whether it's Russia or China or other areas where other smaller regional powers exert more influence, where they will really ultimately carve out their turf.
Yeah.
On that side of things. And I think one of the most important impacts, and this is from a direct impact to investing standpoint, the thing to really think about. And actually, one more thing before we go there. You see this also with, once again, back to the United Arab Emirates leaving OPEC. I think we will see a lot of changing alliances with the shifting that ultimately takes place. The old regimes, the old power structures, I'm not saying that some of them won't survive, but I think we will see some of them severely weakened and new ones created as well. But the most significant impact, I think, of this is in a world where you don't have a single navy largely controlling the seas. I think the greatest single impact is to have flare-ups in inflation occur because commodity transportation and sale is interfered with. Obviously, we see the first taste of this with oil in the Middle East. Oil prices have skyrocketed because of the conflict that's taken there. And I think that this is a taste of what we could likely see, not just with oil, but natural gas, with agricultural products, with rare earth minerals, with other precious metals. These things are distributed broadly across the world. And when you have multiple powers projecting their power and carving up their fiefdoms, it's much more likely for those things to be interrupted. You're much more likely to see a rise in piracy. That's something that we haven't seen a whole lot of. You rarely see it in the world of the past 70 or 80 years. You see that more today. We think we will see that more today. Not just actual piracy, but also just interference of trade by nations. And those things cause what? They cause the cost of insurance to go up. And so I think we will see two things. One, sparks up from flare-ups of inflation from those supply disruptions. And remember, and we see this with oil and gas specifically, but it's true of many commodities. These commodities are inelastic in terms of their pricing. You only have to have small disruptions on either the oversupply or the undersupply to cause the prices to move dramatically. And so they can have really substantial impacts on what inflation looks like globally, which in turn causes what? Interest rates to go up. But the other side of it is also, I think, as we begin to see a large portion of the world move their manufacturing operations away from some of the old areas like China, as an example, I think we will have some more permanent structural inflationary barriers. There's a reason that China has been the low cost, and I would also argue what a lot of people haven't said, high quality, and you did hear me say that right, high quality producer that it has become in areas like electronics and other things like that. And it's because when you're a communistic, totalitarian state, there are no unions. There are no protests. So if you're working in an Apple factory and you decide, I want to get paid more, and you decide to protest one, China says, ding, no media coverage. And then the police get sent in, you get beat up, and you get sent back into the factory. As that gets replaced, there are no other powers, thankfully, that will do that at a large enough scale. And so I think we would be naive to expect that these supply chains will be able to execute at the same cost scale, at least in the environment we're at today. Maybe with AI and robotics, maybe there's some chances that that brings it down. But without that, we cannot expect the same low cost, high quality manufacturing that we had in China without a commensurate pricing increase. I don't think either. And so the final thing I would just say, and this is the most practical piece, is kind of tying back to the inflation side. When inflation flares up, what tends to happen? Interest rates tend to spike. And when interest rates tend to spike, what happens? You tend to see assets like bonds take a very large hit, and even stocks, private equity, private real estate, equity in an ownership of things also are impacted dramatically. And that's really the piece that we feel like is the most significant to watch.
Yeah, that's great. I mean, I think I would describe it as more of a volatility of inflation, which in turn leads to a volatility of interest rates. And that can be an environment that is difficult to invest in. And we'll talk a little bit more about that in just a little bit. Laura, I'd love to get you in on this conversation as well. Do you have any thoughts on what the potential impacts of this shift could be?
Sure. Yeah. One of the trends that we've already seen over the last couple of years, and I think we'll continue to see to some extent, is de-dollarization or the weakening of the dominance of the US dollar. There's kind of two things here. The first is we've already seen tariffs and sanctions kind of be weaponized on a global scale. We've talked about this multiple times in previous webinars, but when Russia invaded Ukraine, and the United States sanctioned the SWIFT banking system, it was a huge question mark over, wait a minute, they could do this. Maybe we shouldn't be relying so much on US assets moving forward. But I think another point is that as we see the US kind of retreat back to the Western Hemisphere and focusing on our space here, it opens the door for, yes, regional conflicts, but also more regional trade agreements. And so if we see countries like China or Russia start doing more trade agreements with countries in Africa for precious metals, or countries in the Middle East over their own oil agreements, a lot of those trade agreements will most likely be done in local currency. So that further can lead to a weakening of the US dollar. Now, again, I don't think this is going to become something where we lose our status as sort of the world reserve currency, but I do think that an expectation of continued de-dollarization will occur.
So I think we've talked a lot about a lot here, and hopefully this has given you guys some glasses, so to speak, to view the world with as we hear news and we hear things developing throughout the world. Hopefully this gives you guys some context to view that with. But when we think about wrapping this up and wanting to leave you guys with, kind of some key takeaways, I think the biggest two takeaways that we want to leave you guys with is one, expect to see as the US shifts away from being the global police force, expect to see a rise in additional or regional disputes, conflicts, kind of is what we've described, in addition to the rise of piracy. And what this ultimately leads to is flare-ups from inflation, which ultimately leads to higher interest rates. So if we were to step back and ask ourselves, how does this impact us from an investment standpoint? we really believe that in this new regime or in this new environment, active investment management is extremely important. Uh, I think what we can feel fairly confident in is that the set it and forget it approach is going to be a lot less effective in this environment. When you have interest rates go up and interest rates come down, inflation go up and inflation come down, that creates some headwinds that are difficult to overcome if you are simply um, buying and holding in that environment.
And especially the safe side of the portfolio. Maybe
Yeah,
maybe on the ownership of stocks or private assets and things like that, that's more, maybe you could get away with that. But on the safe side, the bond side of the portfolio, that becomes a death trap for
absolutely.
a portfolio.
They could really be
Absolutely.
looking at another lost decade, but for bonds, you know, moving forward.
Yeah, yeah. I mean, we could have some periods where it's good, some periods where it's terrible, and it could. It's going to just be a lot more volatile in that respect. And diversification and active management is going to be extremely important as we move forward here into the future. So, with that, we'll open it up for questions to anybody that has them. We've had a few that have come in already, but as a reminder, here is the link to which you can send, or the email address to which you can send those questions. I'm going to kick it off with one that we received. Let me pull it up here. Um, that came in first, and this was a question related more to the stock market as a whole. So when we think about stock market valuations, they're quite high right now, and there seems to be a period of overexcitement. Are there signs of a tech or AI correction in the coming 12 to 18 months? And if so, how mild or severe do we anticipate that correction to be? I'll throw that out there, and whoever wants to jump in, go for it.
So a couple things there. Yes, we would agree. The stock market valuations are very high. If we look at the Schiller PE ratio, we're at 41 and change today, which, as a reminder, is the second highest valuation that's ever been, second only to the dot-com bubble, which peaked at 44. So we're getting in the neighborhood of other periods that would have been described as euphoric and crazy. So now, having said that, the one thing that I think is a bit different about 99 versus today is that we are seeing a lot of what is occurring in AI be broadly used. There was a lot of dark fiber that ultimately was invested in the midst of the dot-com bubble that ultimately didn't get used for a long time, thus the name dark fiber. Today, there are no GPUs, there are no data centers that are dark. Because if they are dark, it's because they don't have the electricity. It's not because there's not the demand. So we have that. So I would say more broadly, the way that we've described this condition is we tend to think about the current stock market like a forest that hasn't had rain for a year. It's brown. It easily the branches easily break. The leaves crunch under your feet. In a situation like this, it doesn't take a very large catalyst to cause a market correction. And so for me, as I look over specifically the AI landscape and where things are at today, the thing that I tend to think is the most likely to cause a problem with that would be a surprise on the AI side. So, as an example, right now there have been the things called the Moore's Law, which is this idea that you see this high, these spikes, these regular recurring improvements in the technology and in the productivity and the efficiency and the cost efficiency of those technologies. Those have held. We've continued to see AI get better on orders of magnitude. It's not been incremental, it's been orders of magnitude. If you were to see that breakdown, that could be something that ultimately is a spark.
Kind of
If you
plateaus or stagnates. Yeah.
Yes. Additionally, we're in a period of time where there's a massive shortage in compute and computing power. So, right now, Elon Musk actually just released in the SpaceX S1, they have a contract with Anthropic where Anthropic is going to be paying them $1.25 billion a month to use their lowest level quality compute resources. And the reason he's able to demand that kind of pricing is because it is difficult to build out and deliver on compute power, broadly speaking. And so, if we were to see a glut in supply compared to demand, if we were to see demand shrink for some reason, any of those things could ultimately spark it. But at this point, I think a substantial surprise for the AI slash front end of the market would probably be necessary. Or we continue to see the valuations just get to absolutely ridiculous levels and you start to see institutional players sell out. Those are the things that I tend to believe are the most likely to cause risk in the future.
Yeah.
One other thing I'll add is, we talked about this. It might have been last webinar, a couple webinars ago, but the amount of money the hyperscalers are spending is astronomical. But if you look at where that money is coming from, for a lot of those companies, it's coming from cash flow. It's coming from existing
Their
revenue,
profits.
existing operations. But there are some smaller mid-sized companies that is not the case. Their investment in AI is coming from debt. And to the point that we just made, if we see a spike in interest rates, where the debt service for those companies who are making, large investments in AI that may not have paid off yet, if we start to see that and they struggle with making that debt payment back, if it hits them, it could hit the hyperscalers in a sense, as far as price dislocation. So I think that's something I'd also be interested to see how that plays out.
Yeah, I think the individual who asked that question is hitting the nail on the head in terms of what we're really focused on, right? Which is we think one of the biggest risks in the environment we're in today is how expensive stocks are. And that is definitely something that we're keeping an eye on. And it speaks to the importance of us maintaining the diversified approach that we take. I think
Eh,
it's imperative in this environment.
Max, actually, there's one last thing I wanted to mention, which I think is really key. So, in a world where compute is really expensive and pricey, it's easy for some of the lower quality AI companies to survive because it's kind of like oil prices. If oil prices are at 120 bucks a barrel, you don't have to be a very good oil company to stay in business and to be profitable. The
Yeah.
same thing is true on the AI front. As long as the compute prices are so high, you can demand a much higher price for those who are willing to pay for it. But at the time, if you start to see that compute costs come down, you could start to see some of the lower quality AI companies not do nearly as well, and to the
Yeah.
point of actually seeing bankruptcies.
Yeah, absolutely. No, that's a great point. Well, we have some other questions that will shift us back towards the conversation that we were having today, which is on Iran. And the first question has to do with referencing kind of the motivation behind the Iran war. And the question asker suggests or makes the point that the stated purpose for the war was to prevent Iran from having a nuclear weapon. And kind of how do we weigh the importance of that? Wouldn't that make it from a financial standpoint, how do we weigh the importance of the war from a financial standpoint? Wouldn't that make it a vital thing rather than just something we could do without? And I'll comment on that first because I believe that probably what the question asker was referring to was a comment that I made, which was, hey, kind of what's the first thing that we could do without when we're looking to tighten our belt? And it is war. And we weren't necessarily, I wasn't talking about the specifics of any individual conflict that we were having right now. And we weren't trying to make any you know quality or decision
Political
comments,
statements.
yeah, political statements on whether or not this was a good war or a bad war. What I was simply stating in that context was when you look at the vital things to a country and you're trying to tighten your belt, expanding your country or being involved in wars that are 10,000 miles away from you tend to be one of the things that you can do without. Obviously, if there's a direct threat to your country, that is of paramount importance and something that you have to address. Obviously, there's going to be some debate about whether or not this was an imminent threat or not, and that's not what we're wanting to get into in today's conversation. But that was more the context for the statement that I had made there, which was when we're looking to tighten our belt, expanding your influence around the world is certainly a secondary or tertiary focus rather than making sure that you can put food on the table for your constituents back home.
Well, Max, I think your point is actually proven if we look at the last three military conflicts. Okay, think about the removal of Nicolas Maduro. We did not put any troops on the ground. It
Right.
was in, out, done. And I think the original intent behind the Iran war was to hit some stuff with some bombs and leave. I don't
And
think
now,
anybody,
yeah.
I don't think the Trump administration expected to still be here 80 days
Right.
later. And I think part of the reason for that is the recognition that one, it's not effective, and two, it's not necessarily cost effective to put boots on the ground. And so, even in these last two conflicts, yes, we're in conflict, but these are not to the level of expense they could have been if troops had actually been put on the ground in either of those locations.
Yeah.
I think if you look at previous wars, it was more about this concept of like exporting democracy versus
Yes.
protecting us at home. And I think this conflict in Iran is not that. It's more of protecting us at home, which
Right.
Yep.
is in agreement with what the new world order, the new stated mission for the United States is.
Yeah, absolutely. I mean, I don't think any of us are going to argue with the fact that one of the first and foremost objectives of a government of any country is to protect its, its homeland. And if there are threats abroad, then dealing with those is certainly of utmost importance. Let's shift over and talk about another question that we received, which has to do with China. The question is the Iran war part of a strategy to starve China of oil? China was a heavy importer of both Iranian and Venezuelan oil. We don't have the option to not engage in the Pacific, so weakening them indirectly seems like an obvious move. Any thoughts on that from the two of you?
I heard an interesting opinion from Gavin Baker, and he made the comment. I think this is really interesting. I tend to agree. I don't think Trump is. I mean, what's the abbreviation? Taco. Trump
Yeah,
always
Doug.
chickens out. I think
Yeah,
that's one of the things that's been popularized here. I don't think we're going to see that here. And the reason why is because if you look at, obviously, oil prices have spiked here. And once again, I'm not meaning to say this is a political statement. It's just I legitimately think that from an economic standpoint, there is a reason. And that's because while oil prices have skyrocketed because of the Iran conflict, look at natural gas one prices. They have fallen by like 20% in the US. It's not happened anywhere else in the world. Everybody else today is paying higher prices for natural gas. So and if we think about what's really important today from a competitive standpoint, from a manufacturing standpoint, from an AI standpoint, it's what? It's electricity prices. What's the closest proxy to the cost of electricity? It's natural gas prices. So today, right now, the US's natural gas prices relative to the rest of the world are better than they've been in a long time. There are parts of the Permian Basin now, because oil distribution has increased, where natural gas prices have gotten to the point where they can't sell them. We can't put enough natural gas through. The natural gas pipelines are already full. And so it literally is just being wasted at this point. And so I think that um, I don't know if it's necessarily to starve China of oil. I would say that's probably not the intent, because once again, I don't think the goal was to literally to have um, was to see this conflict last as long as it did. But I think during at least the negotiations right now, with natural gas prices being as low as they are here in the U.S. compared to the rest of the world, I don't think Trump feels a ton of pressure, especially because at this point, with how long this conflict has lasted, gas prices are going to be high through the elections.
yeah,
That's done. You've already you miscalculated that one. It didn't work out probably the way that you'd hoped it would, but it's too late. You can't do anything about it. So at this point, with the rest of the conditions already on the field, are you actually motivated to really cave early? I don't tend to think that's likely. I think the much more likely impact, or once again, and Max has talked about this and Laura did as well, is I think the bigger strategic objective was just to deprive and take Chinese influence out of the Western Hemisphere with the Panama Canal, with Venezuela, and hopefully soon with Cuba as well. I think is the broader goals that they have.
yeah, absolutely. Um, Probably the last question that we have time for here today has a little bit more to do with kind of the topics that we got into, somewhat with oil, but also with the status of the US dollar as a world reserve currency. So when we think about us being more energy self-sufficient than most of the world, is it possible for us to move away from this kind of global oil pricing to kind of keep us out of the involvement there? I mean, wouldn't that potentially put us in the position of no longer being that world reserve currency? And wouldn't that be a significant hit to our ability to be able to borrow money and continue to fund the things that we need to fund? What are y'all's thoughts on that?
Max, the question is about oil prices. Is that the
Well,
question?
if we end up, let's just say, I think where the asker is, um, kind of what the intent they're getting at is if we move away from, kind of that petrodollar type of concept, right, where oil is no longer priced internationally in US dollars, do we find ourselves in a position where we're no longer that world reserve currency? And is that too much of a threat? Can we actually physically move away from that without it impacting us long term?
I see.
I don't think we are going to do that. So the couple things. One, first off, we are the world's largest producer of natural resources. So guess what? If you want to buy natural gas or oil that comes from the US, you're going to pay for it in dollars. So you're going to still see a larger chunk of that ultimately occurring. Um, I don't think we ever get I don't think there is a way to get away from the global pricing of the commodity. At the end of the day, what happens overseas is always going to impact the pricing of what people pay. And it's not always one for one. And we saw that with natural gas prices. The fact that natural gas prices have fallen 20% in the US while they're up a couple of dollars in other places shows that there can be some regionalization of the pricing. So I don't want to misspeak there. But the other thing is this to remember, if from a currency standpoint, the US is still the nicest house in a bad neighborhood.
Yeah.
Yes, all these other countries, yes, the US's debt situation is getting worse from that standpoint, but at the end of the day, we are still a currency that is much more stable than all of the other. I mean, look at what's happened to the Russian currency. It's been decimated over the course of this war. And the Chinese government have zero qualm with their manipulating their currency for their own advantage. And while some might say, well, don't we do that? Not anywhere close to the same level. If you were
Right.
to look at the inflation rates of those two powers, and they're the two biggest purchasers in the world at this point, I don't think we're likely to see that. So once again, back to Laura's point, I do think we will see areas that don't use the U.S. involved in their trade deviate more from the use of the dollar. But the U.S. is still, once again, we're not saying that the U.S. is not going to be a strong power. We're just arguing that as a strong power, we're going to be one of three, and probably still the strongest of one of the three, but we're going to be one that allows other people to do their own policing. I think that's really the important distinction to keep in mind.
Yeah, absolutely. And I think we're likely to see the influence of the dollar and its role in the world decline a bit, but we're not suggesting that it's certainly about to collapse. And I do think that we're still going to be very much involved in the role of the global reserve currency. I think what you said, Josh, there at the end is extremely important, which is we are the nicest house in a bad neighborhood. I mean, when you look at the alternatives, there's not a lot of other good solutions.
And here's the other thing. Think about it. The other major oil producers are what? The Middle East. And if I was going to make a bet on which relationships probably we actually become a lot closer for us, I think there's a really strong chance that the U.S., at least with some of the larger Middle Eastern oil producers, may continue to maintain that relationship. A lot of these sovereign wealth funds are investing heavily in AI, which inherently means they're investing a lot in the U.S. I think those ties are likely to become a lot stronger in this next iteration of relationships.
Well, it is going to be interesting to see how all of this develops in the coming years. We sure appreciate you guys joining us today for our webinar. If you guys have any additional questions, I know there were a couple that we didn't have time to get to. Please feel free to reach out. We'd love to be able to help. Again, we consider it a privilege and honor to serve you guys as your financial advisors. And we look forward to seeing you again next time on our next Beyond the Noise webinar. Have a great day.